In this range, okay, this is a specific layered liquidity demarker. In this range, okay, what we're looking for is a specific IPTA PD array. So I'm going to ask you, looking at that, what resides inside this range? Inside of this range, you have a SIBI, sell side imbalance, buy side inefficiency. That's this right here in the form of a fair value gap. That's not the only PD array. You have a mitigation block, which is this down closed candle. This down closed candle and the fair value gap, both of them are overlapping and converging right there. Retail is expecting price to find resistance here and go lower. Maybe it's a bear flag. They're looking at that thinking, okay, this is a obvious bear flag. It's going to go lower. And the old low here would be a target of 1, and then they would do a flagpole low to high here, this range projected from this high down. And they would get some level of downside projection for that supposed, smart money continuation pattern. Again, I'm trying to teach you the higher order of price action, okay? And I don't want you to fall in trap of retail like I did many, many times. I want you to look at price like this. The interbank perspective is going up to the top of that fair value gap and mitigation. So retail was thinking at this moment here, it's going to go lower. And then the interbank jams it all the way up into an area of rebalancing, fair value gap, and mitigation. It's also inside of this range in here. So we have all of the order flow that was inside this range here. There's an opportunity to go back in there and mitigate some of those longs that they had on that they couldn't get off. Fair value, which is a deferred rebalance. And then we had the mitigation, which is flipping orders that are underwater all through here. So retail versus interbank, this is the difference. And what's actually happening in here is the open float. Open float is the orders when price was sitting at this level here. The orders above that, okay, is the buy side open float. The orders that are below this point here, like this low here and this low here, are the sell side open float. So whenever I talk about buy side and sell side, I'm specifically teaching you, without saying it, open float. That's the orders that are out there pending. The open interest that's in the marketplace in the form of positions that are active and being protected by stops, or pending orders that would instigate a new position entry. Open float is now pairing orders. So the market runs up, smart money sells at these levels because the orders that would be residing here are being paired together. So the market sees this run up. Anyone that sold short at the bear flag supposed idea and trusted the idea of selling short here or here, their stop loss would be above this swing high here. Boom. Or if they use this low here, their stop has to be just above that low. Well, they hit that too.